India, the country which has overtook the population of China recently and has emerged as growth engine for the world. Recently, IMF has raised India's growth outlook for FY24 to 6.7%, FY25 to 6.5%. For FY25 and FY26, India's GDP growth was expected at 6.5%, a 20 basis points upgrade from October 2023. When the economic growth was impressive, the Indian Finance Ministry released a white paper highlighting how the current NDA government transformed the economy, which was in a bad shape a decade earlier. In this video, an overview of the white paper was presented to compare the economic principles of NDA and UPA. When the current government led by Narendra Modi took the office, the economy is in a fragile state. In 2004, when the UPA government began its term, the economy was growing at 8%, with industry and services sector growth above 7% each and a resuscitating agriculture sector growth above 9% in FY04, amidst a benign world economic environment. The leadership of the UPA, often quick to attribute the 1991 reforms to itself, disregarded them upon assuming power in 2004. From 2004 to 2008, economic growth accelerated, primarily due to the delayed impacts of the NDA government's reforms and advantageous global circumstances. Although the UPA government claimed recognition for the heightened growth, it made scant efforts to fortify it. In its pursuit of sustaining elevated economic growth post the 2008 global financial crisis, the UPA government significantly weakened the macroeconomic fundamentals. Inflation surged from 2009 to 2014, resulting in substantial burdens for the general population. Throughout the 5-year period spanning FY10 to FY14, the average yearly inflation rate remained in the double digits. Over the duration from FY04 to FY14, the economy experienced an average annual inflation rate of 8.2%. One of the significant and notorious remnants of the UPA government was the banking crisis. At the start of the NDA government led by Vajpayee, the gross non-performing assets (GNPA) ratio in public sector banks stood at 16.0%, decreasing to 7.8% by the end of their tenure. However, by September 2013, this ratio, including restructured loans, had escalated to 12.3%, primarily due to political intervention by the UPA government in the commercial lending decisions of public sector banks. In the age where capital movements hold significant sway, India's susceptibility to external factors surged due to its heavy reliance on external commercial borrowings. Throughout the UPA government's tenure, ECB witnessed a remarkable compounded annual growth rate (CAGR) of 21.1% from FY04 to FY14, contrasting starkly with the subsequent 9 years from FY14 to FY23, where the growth rate averaged merely 4.5% annually. Consequently, the economy found itself in a precarious position in 2013 as the US dollar experienced a sharp appreciation. The UPA government's policies compromised both external and macroeconomic stability, leading to a significant depreciation of the Indian currency in 2013. Over the span of 2011 to 2013, the Indian rupee depreciated by 36% against the US dollar from its peak to its trough. The UPA government's reaction to the 2008 global financial crisis, through a fiscal stimulus package aimed at mitigating its repercussions, proved to be more detrimental than the crisis itself. The scale of the stimulus surpassed the Union government's financial capabilities and sustainability. Interestingly, the stimulus appeared disconnected from the desired outcomes as the Indian economy wasn't significantly affected by the crisis. While India experienced a slowdown to 3.1% growth in FY09 during the GFC, it swiftly rebounded to 7.9% in FY10. Comparative analysis using IMF data on real GDP growth during and post the GFC underscores the relatively limited impact on the Indian economy compared to other developed and developing nations. Hence, there was no justification for prolonging the misguided stimulus beyond its initial year. Escalating fiscal deficits pushed the economy perilously close to the edge. Thus, it was hardly unexpected when the Kelkar Committee for Fiscal Consolidation, established by the UPA government, accurately characterized the fiscal scenario during FY 2012 to 13. The report stated, a careful analysis of the trends in the current year, 2012-13, suggests a likely fiscal deficit of around 6.1%, which is far higher than the budget estimate of 5.1% of GDP, if immediate mid-year corrective actions are not taken. Runaway fiscal deficits, leading to unsustainable levels of public debt, can cause diverse forms of macroeconomic imbalances varying with the means through which the deficit is financed. Throughout the period from 2004 to 2014, the UPA government not only significantly increased borrowing from the market but also allocated these funds in a manner that lacked productivity. This becomes apparent when we scrutinize the quantity, quality, and timing of government expenditure during those years. Particularly, capital expenditure, which typically supports public investments in infrastructure, was markedly sidelined over the decade. This neglect created enduring constraints for the economy, compromising its potential for growth. Illustrated in the provided chart, capital expenditure as a percentage of total expenditure, excluding interest payments, decreased by half, dropping from 31% in FY04 to 16% in FY14. Consequently, the economy remained constrained in terms of supply throughout the UPA government's tenure. Coupled with the persistent elevation of aggregate demand resulting from excessive deficits, this situation led to heightened inflation, an increased current account deficit, and an overvalued currency. These issues reached a climax in 2013 when the Indian rupee faltered under the strain of such imprudent policies. Public expenditure primarily favored short-term populist measures rather than addressing long-term economic needs. During the UPA government's tenure, healthcare expenditure continued to be a significant burden for Indian households. The persistently high proportion of out-of-pocket expenditure, which accounted for 64.2% of total health expenditure in India in FY14, indicated minimal improvement from the 69.4% out-of-pocket expenditure in FY05. The UPA government implemented a complex web of regulations that hindered economic growth and development in the 83 coastal districts, primarily through restrictive measures. This approach made it exceedingly challenging for communities and districts in coastal regions to capitalize on expanding economic opportunities. Additionally, these regulations significantly impeded the tourism sectors within these districts. The UPA government faced criticism from international agencies for recurring electricity shortages. In its World Development Report 2008, the World Bank highlighted the significance of electricity for tuba well pumps in irrigating 55–60% of India's irrigated land. However, it noted poor service quality due to erratic and limited supply, as well as voltage fluctuations, leading to crop losses and damaged pumping equipment. Additionally, India's telecom sector stagnated due to the 2G scam and policy paralysis during the UPA regime. The spectrum allocation process lacked transparency and was frequently abused before the 2G scam unfolded, causing distress in the sector. Subsequently, from 2010 onward, minimal spectrum was allocated to operators, hindering industry growth. The cancellation of telecom licenses issued in FY09 by the Supreme Court due to transparency issues exacerbated the sector's challenges. Consequently, the telecom industry experienced stagnation, reduced competition, and a decline in foreign investment due to policy uncertainties and legal obstacles. Coal block allocation. Corruption led to a loss of 1.86 lakh crore in coal block allocations. The Supreme Court cancelled 204 allocations. Charges have been filed in 47 cases, resulting in 14 convictions. Commonwealth Games. Corruption and mismanagement plagued various projects. 8 cases are under trial. 2G Telecom. Corruption led to an estimated loss of about 1.76 lakh crore in potential government revenue. The UPA government's tenure was termed a lost decade because it squandered the robust economic foundation and pace of reforms established by the Vajpayee government. The anticipated compounding growth failed to materialize. Moreover, the UPA government missed significant opportunities for technology-led innovation, efficiency, and growth. While the Vajpayee government laid the groundwork for telecom reforms, the UPA era was marred by the 2G scam, leading to the cancellation of auctions. BSNL, which was a $6 billion powerhouse in 2004, incurred losses during the UPA decade. Additionally, India became almost entirely reliant on imported telecom equipment. Amid the crisis, the ND.A has came to power in India in 2014. The Indian economy has witnessed significant structural reforms, bolstering its macroeconomic foundations. These reforms facilitated India's transition from being categorized among the fragile five to joining the ranks of the top five economies in just about a decade. Such transformations have rendered the Indian economy more robust and resilient, particularly in the face of a challenging global landscape. Over the past decade, the government has injected vitality into the previously stagnant financial sector and transformed the credit ecosystem within the economy, resulting in significant enhancements. The introduction of the Insolvency and Bankruptcy Code, along with various measures implemented by the RBI and the government to fortify the banking sector's balance sheets, such as the Asset Quality Review, Prompt Corrective Action Framework, and bank mergers and recapitalization, contributed to a notable reduction in the ratio of gross non-performing assets as a percentage of gross advances, reaching a multi-year low of 3.2% by September 2023. When the NDA government assumed office in FY15, the rate of national highway construction was stagnant at 12 kilometers per day. However, under NDA administration, this pace surged by more than 2.3 times to reach 28 kilometers per day by FY23. In comparison, during the UPA government's tenure, approximately 16,000 kilometers of national highways were laid over 10 years, whereas the NDA government has accomplished at least 3 times that amount in nearly a decade. Additionally, cargo traffic at major ports increased from 581 million tons to 784 million tons, and electrified rail routes rose from 22,224 kilometers (FY15) to 50,394 kilometers (FY22). India's aviation industry has also experienced significant growth and transformation over the past decade, with the number of airports doubling from FY15 to FY23. The reform measures undertaken by the NDA government have significantly elevated the medium-term investment prospects of the economy. Both domestic and foreign investors express high optimism regarding India's growth potential, anticipating lucrative opportunities as the Indian economy expands. The announcement of India's inclusion in JP Morgan's Government Bond Index Emerging Markets is a milestone event, underscoring India's growing significance in the global economy. This will not only help India raise more funds but also increase the investor base for government securities and help India meet the country's growing borrowing needs. The execution challenges that plagued the UPA government have been resolved by implementing technology-based targeting and monitoring mechanisms by the NDA government. Technology has been utilized as a vehicle of social empowerment, unlocking the potential of the JAM Trinity, namely Jan Dhan, Aadhaar, and Mobile. The issue of leakages has been taken seriously, and the first iteration of the JAM Pahal scheme for transferring LPG subsidies via direct benefit transfer (DBT) saw leakages reduced by 24%. Schemes has instilled transparency and accountability through real-time monitoring. For example, geotagging of assets, PM Awas Yojana, etc., has enabled real-time monitoring and transparency in the implementation of big-ticket programs. The farmers were empowered and their incomes improved by the PM Kisan Samman Nidhi without harming the borrower-lender relationship. The flow of credit to farmers was hindered by the UPA's ADWD. In contrast, the ability of the farmers to repay their loans was strengthened by Kisan Samman Nidhi. This key difference in NDA approach to welfare is characterized by efficient, effective, and empowering delivery. To tackle the enduring challenge of high inflation inherited from the UPA government in 2014, strategic measures were implemented by the NDA government to address the root cause of the problem through responsible fiscal and monetary policies. Firstly, fiscal discipline was emphasized in the government's spending decisions. The average annual inflation between FY14 and FY23 decreased to 5.0% from an average inflation of 8.2% between FY04 and FY14. GST, the new tax structure, is characterized by political consensus building and the pooled sovereignty of the GST Council, both salient examples of cooperative federalism. At the same time, the monthly average revenue from GST has increased from 90,000 crore in FY18 to 1.7 lakh crore in FY24. Economic activities were failed to be facilitated by the UPA government. Instead, hurdles were created by the UPA government that held back the economy. The afterglory of the lagged effects of the reforms of the Vajpayee-led NDA government and benign global conditions were basked in by the UPA government, and the resultant fast economic growth was proceeded to be exploited for narrow political purposes without much concern for long-term economic consequences.
Are you finding our videos useful and interesting? Please consider liking and subscribing to our channel for more content like this.